Hello, and welcome back. We are taking a look at a company that was suggested by one of our subscribers, and this one is British American Tobacco. It's a tobacco company, obviously, and I kind of wanted to take a little bit of a look at what is going on with tobacco use worldwide. And so I researched it a little bit, and I saw the global cigarette consumption, for instance, from 1880 to 220 and you will 2020, and you will see here that overall, cigarette consumption has been increasing. Yet in the past couple of years, it has been going down quite a lot, actually, quite steeply. Now, still, the world is really smoking as well, but it's less than what it used to be, and there seems to be a little bit of a reduction over here overall. Also, you can see it here. Tobacco use rates have generally decreased over time. And so you will see that trends in cigarette smoking rates have fallen significantly for both youths and adults, as you'll see here from the American Lung Association of CDC data. That's the US data pretty much here. You can kind of see that one of the bigger markets in the world seems to be dropping its cigarette smoking rates. And obviously, as an investor, you have to be taking a little bit of a look at this data. If you are looking to invest in a tobacco company, you will see that more people are actually trending towards actually quitting smoking cigarettes over here, is what we are seeing here. And yeah, you will see that there is overall a little bit of a reduction in what has been going on. And e-cigarettes could be another thing that is a potential for tobacco companies. Maybe I don't know how they are branding these things, and how well they are really doing. But it looks like there is some use. However, overall, there is decreased, quite a lot of decrease here in also all sorts of different age ranges, as you'll see here. So that's something to keep in mind, and this is about all other tobacco products. That said, if you're buying something that is fairly cheap and it can give you some sustained dividends in this situation, it may be worthwhile. Now, what I wanted to take a little bit of a look at is what British American Tobacco has been doing in its stock history. And you will kind of see the whole pattern here. And you will notice that the company's price hasn't been, flying at any point in history, frankly. And overall, you will see that we are sitting at a range of 0 to almost 70 over here. And we're taking it back to 1981 over here. And so you can't really expect explosive growth out of this company. And you can kind of see it here in the past few years, like 5 years now. The company has been trading at a range. You can kind of see it even more clear here in the 5 years data, from 55 to about 40 here. So if I were looking to buy this one, what I would have in my mind is basically buy it for the dividends and potentially sell it when it's near 50. Or maybe near 55 in some situations, since it has reached this level. Probably I would sell near 50. But this is how I would probably play this one if I were looking to buy it at some point. I don't think this would probably be a long-term company for me. Although, in some situations it could be. But I just don't like the decline of tobacco use here, is what worries me a little bit, for holding this one for the next 10 years, let's just say. But maybe for a few years, like grabbing the dividends as well, may not be a bad idea. And also the P ratio and price to free cash flow have been overall dropping, although they have been at even lower pretty much ratios at some point in the past. Not that much lower though, so it looks fairly decent here. And in terms of outstanding shares, the company hasn't been issuing or pretty much buying back shares. And it's a company that is basically stale. As you'll see, they are almost making the same amount of revenue, a little bit up and a little bit down. Like 7% in 5 years is basically no growth, very little growth. And 5-year free cash flow growth is again about the same. So everything is basically what you are seeing is what you are getting here. You probably are expecting it to grow at a similar pace, basically being the same. And maybe, as the market progresses and it becomes better, maybe you just get a better price of this one, out of this one. But in the meantime, what is the nice thing about it is that you could be getting a nice hefty dividend yield, which the last few months has been 9.7%. But the effective right now, I believe, is a little bit less. We can take a look at the dividends paid and see the exact one. Okay, it's 7.5, the effective dividend yield that is today. But overall, I would say that you are getting probably something like 7 to 8% in terms of a dividend yield a year, which basically means that you would need about 10 years of 8% to get back 80% of your investment here, the capital that is. And of course, if the company does better, you can also potentially get a better price, which is what I think probably going to be around the 50s if that's going to happen. And this is where I would probably sell then and maybe wait it to go down again to buy once more. It is a sector, it is an industry that you could just sit on and grab some dividends, but you really do want to buy it at a cheap price. And it may not be the cheapest, but it may not be super expensive as well. We will examine that in a little bit more detail. So these are the first remarks, and they have a high payout ratio here, which is interesting as well. And expected. And this is where we're going to be using our stock evaluation. We're going to be using both our tools here. The dividend discount model will tell us a few things about the dividend. And what we're going to do is you will see that the dividend growth rate, generally speaking, has been 4%, 5%, but some declines as well. So I'm going to go with something that is less, like 1% and 1.5 and 2%, just to be a little bit safer. An annual return that I will ask to get out of my dividends is, let's just say 8%, since I'm going to be getting a little bit out of the stock increase as well. But let's just say I require 8% here. And you will see that at 8% I'm sitting pretty, so this is a green right now. And it's fairly solid. It's a potential buy. Now, if we take a look at our stock evaluator, however, let's just see what we're getting out of this one, because the revenue growth is not looking pretty here, and you can kind of see again about 4% in the past 5 years over here. That's the revenue. And we can see, we can actually do something like maybe 1%, 1.5 and 2, and see what we get out of this one. And a net income margin of, it's about 24%, it's about the same. I'm gonna go a little bit less in some situations, in the lowest situation, the low projection. 23, 24, 25, 25 may be a little bit much. And the free cash flow margin that is typically above 100% for the company. So I'm going to be going at about 120, let's go 125 and 130 here, and 13% for the annual return. And let's see what we're getting out of our discounted cash flow model situation. And in this case, we're getting a pretty decent price as well. So 37 looks pretty over here. Now, of course, we can try some a little bit declining margins, potentially thinking that the company would have to spend more in order to keep attracting customers as the overall climate changes for tobacco and becomes tougher to sell. So let's just say that they become a little bit less efficient with their model over here. So let's just try these values here and see what kind of projections we're getting. And even if that happens, we are still in the green here. So it is a company that looks fairly interesting. And again, this is how I would play it if I would buy it. And I think it's a potential buy. The thing that I do like about tobacco right now is that we are potentially entering a recession era, maybe. And when that happens, tobacco use tends to increase overall. So this may be a positive sign for a company of this sort that could be making some money. So it may not be a bad buy for the upcoming few years, especially, again, if we enter a recessionary period. You can kind of see the financial statements, though what I told you a little bit earlier, it's a stale company. The revenue hasn't been growing, as you'll see here. You'll see the exact numbers over here. And the net income is about the same thing. It hasn't been growing, but it hasn't been declining much either. So again, we are sitting at a similar level. And what you would basically expect here, sitting at a similar level and growing, pretty much slowly over the years. It's fair. It's fair for a company of this sort, and it's kind of expected as well. So again, as we are entering a potential recessionary phase, it may be a nice defensive play here, buying a company of this sort. So I definitely wouldn't discard this one. So thanks for watching. I hope you enjoyed this video, and I'll see you in the next one. Bye bye.